Alright, let's take a look how you could have traded the market on Monday using the 1 hour candle opens and taking the setups on 1 minute chart. As you can see on the left side we have the 1 hour time frame, right side we have the 1 minute time frame, and these boxes are 1 hour candles, and we have 1 hour candle live opens and the previous opens marked out, and inside the 1 hour candle we have 1 minute time frame. So let's take a look how we could have traded this. As you can see on the left side on 1 hour time frame we swept multiple highs into the daily fair value gap, right? So we can expect some kind of rejection from there. And we also had a nice big new week opening cap right below us as the target. Back in our minds we know that we have new week opening cap below us and we are inside the daily fair value gap. We swept multiple highs, right? High over there, this high, and we can expect some kind of pullback, right? So let's take a look what happened over here. This is a 6 a.m. New York time. The previous candle is kind of small, shows that the price is stalling. As you can see over here, this candle doesn't even close above the previous candle, so this is more like accumulation or consolidation, or you can even call this inside candle, right? Even though that it traded above, but the candle body closed back below the previous candle's high, right? On the left side we swept multiple highs, and now we simply observe the price. What is the price going to do? We just want to see if it's going to range, if it will take out the high or what else. So we can see over here that the price is accumulating. We don't take any trades right over here. We let the price play out. It will either take out the high or make the continuation to the downside, right? Since it's pulling back, or at least it's going sideways, right? Now it's 7 a.m. right? 7 a.m. opens up. The previous candle closed bearish. We dumped down. This could have been your first entry over here, but the price never pulls back and the price keeps dumping. I mean, this was the bearish confirmation candle. As soon as it opens up at 7 a.m. it starts dumping. Let's say we missed out. Okay, no worries. Aggressively going down. It's sweeping the most recent swing low on a 1 hour time frame, right? And we are simply waiting for the pullback. We had two 50-minute caps above us as well. The price is ranging, all right. 8 a.m. opens up. We want to see the price pull back into the first 50-minute fair value gap. If the price is truly bearish, it will respect the first fair value gap, right? And you can see that the previous 1 hour candle was very bearish. It's a confirmation candle to the downside. You're most likely going to get bearish continuation to the downside since the candle was so bearish. See that we came into the 50-minute fair value gap. The previous candle was super bearish, right? And you can see that the bullish confirmation candle got closed below. I mean, this is the spot you could have taken entry and targeting the lows. This could have been your first entry, and stop loss goes above this bearish confirmation candle, right? Just in case if it wants to come back up and make the sweep. Immediately close below the live open with momentum. This could have been your second entry right over there, right? The price dumps down. We have new 50-minute cap, dump down. We come back up. Let's see how the price plays around at the live open. Do we get any continuation? Instead, it closes back above. Okay, the price taps in with a big wick. We got bullish confirmation candle, so we close bullish. This is where you could have placed your entry to the upside, knowing that we have equal highs over here inside the 50-minute fair value gap. It didn't sweep really that high, right? So we can expect the price to at least take out the high, right? It pulls back in. It sweeps the high into the 1 hour fair value gap. This is the 9 a.m. open, and what the price does after sweeping the highs, it immediately dumps down below the previous open. This is where you could have placed your short, right? Stop loss goes back above the high, and you can make the continuation rate, right? The price trades back above, makes the pullback, dumps immediately down. This is where you can add. It's the second confirmation that the price is disrespecting the openings of the previous candle, right? And since it's so bearish, right, we come back once again, we respect confirmation, second bearish confirmation, and price keeps going, right? We're simply looking at the previous candle, what is it doing, and how is the price playing around these opens. So we tap into the new week opening cap, get nice bullish reaction, and immediately we dump down, inversing this momentum candle, right? Let's say we didn't get any entry over here, we stayed out because we don't know if it's going to reach to the upside, right? We have lots of like trendline liquidity above us. And now you can see that the price is trading below with the momentum, right? Most likely we are going to fill the full new week opening cap. So you know that the momentum came from here, right? We got two bullish confirmation candles, we thumb straight down. This is where the buyer stepped in. Now they're underwater, right? This could be your next entry, right? Once the price is pulling back, it's such a strong momentum to the downside that you can place your limit orders and you can expect at least to make the continuation to the most recent low. We come back into the bullish confirmation candle where the move happened. We flipped it. This is now the breaker, right? We make the continuation. So this is the 10 a.m. open. As you can see, we open up with a green candle and immediately we dump down with strong momentum. This is the second place you could place your trade. Since the momentum is so strong to the downside, you can take this short, right? It pulls back, taps into the 10 a.m. open. You can target the low. Once again, another winning trade, right? Now we are observing the price. We have a cap over here, 1 minute cap, lots of wicks. And the price keeps going. Let's say you don't get any trades over here since the momentum is so fucking strong, right? And we also have the monthly fair value gap to the left side. And now we finally see that we are sweeping something. We can expect a bounce since there is such a strong momentum to the downside with no pullback, right? So we can wait. Another thumb down. We have 3 50-minute fair value gaps above us. We can expect the price maybe pull back at least to the first one, right? All we want to see is to at least close above this bearish confirmation candle to the downside. And this is where you can market enter, right? Since the momentum is so strong and you can target the first fair value gap. But let's say you miss it out, it doesn't make any pullback if you put your limit orders over there, no problem. Now we have 11 a.m. candle opens up, right? The previous candle is bearish. The previous open is over here and current live candle open is here. Now we're simply watching how the price is behaving at the first fair value gap, and does it stay below the open, right? It comes back up, let's see, and we get the bearish confirmation candle with a wick. We're respecting the live open. Once again, you could enter short over here, place your stop loss maybe above here and target the internal swing points, right? We keep respecting the open. And once again, you could have made a continuation trade, right? And now we let the price play out. You see that here is a lots of low resistance liquidity. This is a small trend line right over here. And you know that the previous candle had a big wick. We didn't really make any pullback, so you can expect some kind of bounce at least back to the upside, right? You don't have to take this because the trend is to the downside, but you can expect a pullback since we open up and start trading right away back down. Keep building the trend line, right? And now we're breaking the trend line. Okay, we're about to close the 1 hour candle. Alright, new 1 hour candle opens up. Now we know that we have low resistance liquidity to the upside, right? We want to see how the price behaves. It pulls back, immediately closes. You could go short from here. Let's see what the price does. It's accumulating at the open of the live open, and we immediately shoot back up, right? Taking out all of this trend line liquidity to the left side. We're sweeping the previous 1 hour candle into the 1 hour fair value gap. If the price is bearish, it should respect the first fair value gap. So we observe the price. What does it want to do? Is it going to make some kind of stronger move to the upside, or it will dump back down, right? So you wait. And you can see that the price is making lower highs and lower lows, right? We're respecting the previous open after sweeping that high over here. And you can target the live open just in case if it wants to bounce back up, right? You can place your stop loss a little bit above. It taps in. We have some kind of low resistance liquidity over here as well. We come back to the live open. And now you can see that the previous candle closed very bearish with a big wick, right? So we can expect some kind of continuation from these opens. Usually when you have a big wick candle, you can expect at least something to be filled, right, from that wick. You know, many people take this as a rejection block and the 50%, and you want to see some kind of rejection back below the open and make the continuation, right? Or if you want, you can go short from here as well. Now we have 50-minute fair value gap above us with lots of liquidity here. We want to see the price to pull back into this previous 1 hour candle wick. We have some nice liquidity forming below us. We trade above the opens, right? We're pulling back. Now the previous candle closed bullish. We still have some kind of liquidity over here. We have to be aware. Okay, it's respecting the previous, live open. We want to trade below the previous open, right? We have 50-minute fair value gap here, bearish here. This is like ranging, right? This is a huge range in itself, right? This is range. Now, why you don't want to take this short from here is very simple. Since we have nice, easy liquidity above us, this is a sign that the price might go both ways, right? We have some liquidity here, we have some liquidity here and here as well. So we simply want to observe the price. What does it do? It's breaking out. As you can see, it's respecting the previous open once again. I mean, this could have been your trade to the upside, right? And now we're back at top of the range. We're trading into the 1 hour fair value gap. We're sweeping that high over here. We're pulling back into the previous swing low that sent the price up. We can expect some kind of rejection from here. As you can see, the wick is forming. The live 1 hour candle wick is forming. This is the place where you could go short. You can target the fair value gap low, right? Comes below the open. You see it respecting. Okay, comes back up. We have a huge wick here. And now we have to see how the price behaves around these opens. The previous candle was with a big wick. It goes below, this is where you can add to the short, right? Since the price is respecting the open. Okay, it comes back up. Now this is the place where you might close the trade, right, early if you want, but you know that the overall trend is bearish, and we just swept the previous 1 hour candle high, right, swing high. We can expect the price to make continuation to the downside, so you can keep holding it. But sometimes you have to cut the trade if it goes back below the, above the open, right? The price comes back to the open, it's respecting it. We can see the accumulation going on over here. And now we trade below the open. Now I personally will drag my take profit to this 1 hour gap fill just in case, because you can see that the trendline liquidity is forming over here as well. The low resistance, we have 4 hour fairly gap above us. Price comes down, taps and fills the 1 hour fair value gap. We have some liquidity to the upside, right? Let's see what the price does. It's sweeping all of these highs. And once again, we seem to be closing, but suddenly get a bump. Okay, no worries. Let's see if the price wants to go into the 4 hour fair value gap, but nope. As you can see, it opens up, it sweeps, dumps right below the 1 hour. You could enter right over there and make the continuation to the downside, expecting to maybe take out these. What is going on? Okay. Something is... Okay, anyways, the new candle opens up, it sweeps the previous one into the 50-minute fair value gap, right? Even though it's bullish, the previous one. We dump with the momentum, right? You can go short from here, or you wait for the pullback into the previous open and make the continuation. Once again, price comes back below. Okay, we missed that, right? It's respecting the previous open and makes the continuation to the downside, taking out some of the liquidity over there. It comes back to the live open. Once again, it dumps down, makes the double top. And once again, it's respecting the live open. And this is what I'm telling you, that there is something about 1 hour candle opens. They're like, you can use them as directional guidance, right? And that's about it. This is the Monday price action.